Hey, what is up, dudes and dudettes? This is Due Diligence here, and since I am traveling and I don't have all of my equipment, bear with me. I will set up my camera tomorrow, and today we're gonna have a very quick video on today's market condition and whether there's gonna be a Santa rally or not. For those of you who don't know what Santa rally is, in a stock market, usually in between December, the week of Christmas, which is most likely usually happens on December 20th, 21st, all the way extended to December 24th. It's basically a very short week where we only trade on 3 trading days or 4 trading days. And then usually by the end of extending into Christmas Eve, so basically by the end of the market end of the 23rd, usually we will see a market rally and usually we'll see a green day. And because we have 40 years of Nasdaq data, we realize that the probability of a Santa rally is actually really high in terms of like historical data. But again, a lot of those quants are telling you guys or us or anyone who's trading stock that historical data actually doesn't matter because all of the stock's movements are random. But we are more of a traditional type of trader with some new quant, let's just say new quant background. We do think historical data have some value in it. Therefore, we're going to show you some historical data and let yourself decide whether you think there's going to be a Santa rally or not. Okay, so does this graph look familiar? You guys are like, oh my god, it just looks like our recent Nasdaq movement. At the point of this candle chart, where do you think this stock's gonna go? A lot of you are gonna be like, hey DD, isn't this obvious? The trend line is going down, right? Okay, the trend line is going down. Sure, it gapped down a little bit, and then it gapped down again, and somehow it started moving up. So you guys are like, okay, so what's gonna happen after this? Is it gonna reclaim this spot? How long is it gonna take to reclaim this spot, or is it gonna keep going down? What do you guys think? Ignore this, right? This is right now's price. This is before's price, and you guys, most of you are gonna like, oh my god, it looks like you have a trend reversal. It's gonna back down to here, and it's gonna go up again. And guess what? It dropped down again. This is what happens during the actual quote-unquote COVID supply chain event, right? Supply chain shock and things just going down, and then it bleeds down and down and down to a sort of like an all-time bottom, really. And then we see a recovery coming up, and then recovery takes about 3 months. And for those of you who's been a subscriber for our channel for a long time, you know that stock recovery usually happens around 3 months to 6 months on the Nasdaq exchange, or just Nasdaq in general, the index, and it takes about 2 weeks to 2.5 weeks to drop down to the lowest bottom. Okay. And you guys like, how does this have anything to do with the current situation that we have a Santa rally or not? So does this look familiar? It does, right? If you do a slope analysis, you will realize that right now the stock situation is very similar to what happens around February 2020. But the interesting thing you have to understand is, do you guys think COVID is as bad as before, or it's getting significantly better? Or let me rephrase this in another way. For those of you who are saying that you should buy a lot of puts and then just hold it until January option expiration, do you guys really think this variation of COVID would induce another lockdown and would actually make supply chain worsen than before, or worsen than what we have in June or July? Take a minute and think about that question, because that question will decide whether you're going to be on the call side or on the put side on this Christmas rally. If you think that the stock market is going to keep going down, which then implies that you think right now the new variant of COVID is actually worse than the initial COVID when we see the shock in supply chain. And you guys are like, you gotta play both sides, DD, because you can't just give one side, right? So one of the examples I can give to you that will support that assertion is we still have very bad shipping rates overseas. Therefore, our inflation rate is gonna keep going. and then because the Fed is not going to increase the interest rate, therefore it's most likely that this continuous effect of COVID will keep dragging the market down. But to what point though, right? The most important question is to what point? And this you have to decide for yourself. Why? Because deep down the true value of COVID destruction. How much true value of COVID destruction do you really think that happened in the past year? 20% of US economy get devastated? Restaurants and those people getting hurt. How much are those accounted for the real GDP of United States? 10%, 20%, 30%, 70%? How hurt are they? With all the stimulus checks, do you think right now we're in a worse spot than before, or we're in a better spot? Think about that question, right? If you think we're in a better spot, does it mean that the shock to supply chain would be mitigated to the smallest extent? Then does it make sense to have a sad Christmas day on a year that's already super sad? Probably not. So another assertion for this is all of these drop downs, we're not talking about here, right? Let me take my pen out. We're talking about here and here. What we suspect of here is there are two reasons that all of these drawdowns happens. One is last Friday we have a huge amount of put expires, and then when put expires, what people do to hedge is they buy another they buy a level up of strike of put into this week. Why? Because this week only have we only have 4 trading days, right? I think we only have 4 trading days. Let me check real quick. 1, 2, 3, 4. We only have 4 trading days this week. Therefore, a lot of people are thinking that the trend line, because a lot of traders are still trend line traders. Like they're like, oh my god, it goes down this much on Thursday, and then it's most likely what will happen is Friday we'll see a quick capture rebound, which happened, and then somehow it dropped down again, and on Monday we have another COVID news. And then we have another supply chain news. We have some bad news about how many people are getting COVID, and it seems like sales data are not going so well, so they drop down a little bit more. But if you think about this, every drawdown movement have either a volume contraction movement or a volume expansion moment. You actually have a volume extension moment by the end of today, which means a lot of people are actually expected to rebound tomorrow, and a lot of people are expecting that there are going to be further rebound extending into the Christmas rally. Why? Because a lot of people believe that all of these little drawdowns or little gap downs don't provide any liquidity gap value. You see this? Even though this liquidity gap got filled, but it's most likely it's going to get filled again, because the real value of U.S. economies on the Nasdaq should be around 170, right? But because of COVID and because of the inflation, we already did our maximum downside to here, like 130-ish, right? And right now it's at 146. So all of these are actually creating room for the Christmas rally. So what's most likely to happen during Christmas rally is by the day of Christmas rally, which is on the 23rd by the market close, whatever we got over here is going to get recaptured. And then most likely what's going to happen is NASDAQ will go back to 158. But what's most likely to happen afterwards is actually it's going to look like this. So you will see somewhere around like January over here, and historically speaking, January is the peak of basically what's going to happen is Christmas rally peaks on the New Year's Day. But on New Year's Day, obviously we don't trade. Therefore, we gotta look for that week's exploration and then sort of figure out where that lies. And then around by the end of that January New Year's day or the New Year's Days week, and this is where a lot of people started selling a little bit, and then somewhere around mid-January you will see a volume contraction. Consider a lot of people already selling over here, and for those of you who follow general trend line, it actually looks like this, right? And it will probably like go somewhere around here. But consider NASDAQ always go around an anchoring point of 150, therefore we're going to adjust this a little bit and then go like this, and it's going to trade flat. And then somewhere around this part, which probably is going to be mid-January, some people who have information or who think that getting into the next tax season, which is the tax ending season, some people are going to do some loss prevention, loss harvesting, selling stocks, and therefore they're going to buy the dip a little bit, and they're waiting for the March interest rate hike news. And then when March interest rate hike actually got confirmed, that means bank before March actually will have information on the interest rate hike. Therefore, they will already start preparing. Therefore, from February to March, it's going to be hell month. And then after March, we will see a bottom, and we can buy back here, and then just have another years of good year. You see what I'm trying to say here? Don't worry, guys. And yeah, see, here you go. I'm holding your hands. And for those of you who need more confirmation bias, we go to our Chinese app and look at the worst historical drawdown actually is on 2008, right? We can't really go back even more because I don't really have enough RAM on my computer because I'm running actually 2 algorithms at the same time right now. I want to run it real time. You guys will have it. We will have an update on the algorithms and everything later on this week. You see this? This is like COVID reenacted, or COVID reenacted the 2018 shock. And if you put your cursor over here and you keep going and keep going, you see what happens. Like it just slowly rebound, and eventually, if we go on the weekly chart, we can't really go back down because there's some problems with coding this problem in this thing. Eventually, after a year of recovery, we will see a temporary drawdown, and then eventually, when the market falls, I think what's really gonna happen is when market drops to 120, if it ever happens, it's gonna rebound. It's gonna have a definitive rebound when it's at 120. This is it for this video. Hopefully it doesn't take up too much of our time, and hopefully I give you guys enough information for you to make a decision on whether you think there's going to be a Santa rally or not.